that supply and demand, we have different patterns of supply. We have the supply and demand. It can be found in two types of patterns. On the chart, the reversal and the continuation. So the reversal, we said the patterns are formed when there is a change in the trend, either from an uptrend, downtrend, or from a downtrend to an uptrend. So for the reversal, we have two possible patterns, which is the drop-based rally, and the rally-based drop. So for the drop-based rally, in this pattern, price is initially in a downtrend, then forms a base before making a rally side. Then we have the rally-based drop. In this pattern, the price starts with an up before forming a base at the top area of that uptrend. So from is the price for creating a new downtrend. So the drop-based rally, from here we could see the market dropped, the market a base, the market rallied, so which forms a demand. So whenever in future market changes that zone, you could see that market will bounce back to go for it. That's the same way on the right. We have a rally and a base and a drop. So now let's look at a real example. So from this chart, you could see that market was rallying. The market formed a base on the left side. Market rallied, base, market dropped. So that base is where you are going to put your where you are going to put your zone. So whenever market there, you are going to expect a sell. Rally based drop forms a supply. So from here to on that drop to, you could see drop, base, market rallied. So that side too is also a demand zone. So whenever market comes in future, you are going to expect a buy. So let's see for continuation. So for the continuation, we said that beside the reversal patterns, supply and demand areas may also appear in a trend condition. So in this case, such areas play as a base for the price before continuing the overall trend until the strength correlation between the BS changes. So that is the same way. There are two continuations, which is the drop-based drop, and the rally-based rally. So the drop-based drop, the price drops, slows down for a while on this. So that is where consolidation happens, transaction happens, then continues to fall. So that on where market consolidated is your base. Supply and demand traders, we trade bases. Then we have the rally-based rally. Price increases, slow for a while on a base, then continues to increase. So that base where market consolidated is where we are going to put our base. So the drop-based drop from a supply, then the rally-based rally forms a demand. So we could see from this situation, market dropped, market formed a base, the market continued to drop. So on that base, you draw your zone. Whenever market is there, you look for more sales. That's the same way on the right side. The market rallied going up, market formed a base which is comprising some bullish and bearish candles before market also moved. So from that base, whenever it approach there, you look for a buy. Do you understand? So let's look at this chart. You could see that on the left, you could see the market rallied. The market formed a base. The market continued to rally. Do you understand? So from that base, you mark your zone. So whenever market approach there, you look for opportunity to more buys. And on the right side, you could see a drop and a drop. So you mark your base. Whenever market approach there, your sales. Do you understand? All right. So unlike the reversal patterns, continuation patterns are found within the trend and are considered weaker. They are weak reversal structure. So in trading, we will give reversal patterns a priority. They are very strong in spotting a potential trading zone. So yet doesn't mean that we should ignore the continuation patterns. Yes. So consider not strong as reversal patterns. Continuation patterns still worth trying in many cases. So since we have grasped the necessary fundamentals of the two types of patterns where supply zones may appear, we will continue to discover potential supply and demand zones in our next lesson.